We are taking a look at, there's an interesting story from a couple of years ago called Hipgnosis. If you've never heard about this was a fund that was set up in the UK to go out and buy streaming royalties, and then they would pay out a portion of those royalties to their investors. And this is the story of how they blew up. Founded in 2018 by Mercuriadis and a couple of his friends. They decided, hey, you know what would be a good idea is if we got a bunch of money together, we went out and bought some streaming royalties, and then we paid our investors. They raised a lot of money very quickly, and we're doing really well. One of their biggest offerings was $300 million. Their aim was to raise £200 million, and they ended up raising $300 million, which is about £236 million. So they overshot it a little bit. The way they raised this money was by issuing C-Class shares. And investors bought those C-Class shares. They took that roughly $300 million and they went and they bought music. In 2023, they had 97 of the 419 songs that by June 2023 had surpassed the billion streams mark on Spotify. They went out and bought the rights to these songs. For those of you who may not know, all you need to do is record a song. And then every time it gets played, the people that are playing it have to pay royalties. And these royalties are things that you can buy. For instance, somewhat of a culturally relevant topic right now is Mariah Carey. It is December 1st, and Mariah Carey has fully defrosted. Her song, All I Want for Christmas Is You, is back at the #1 spot of every streaming service ever. And it is reported that Mariah Carey earns between $2.5 and $3 million from royalties every year. $3 million may seem like a lot, but is actually a very small amount of the total amount of royalties generated from the song every year. The total royalties per year of All I Want for Christmas Is You are about $100 million, which is a staggering amount of money. What this company went out and did, right here, All I Want for Christmas Is You, is a song owned by the Hipgnosis Fund. Or at least it was in 2023. There are other kinds of royalties that you can buy as well. Obviously, music streaming is probably the most easy to wrap your head around. One bit of royalties that you might not know about is Listerine. When Listerine was sold, founder of Listerine made a deal that a percentage of all Listerine sold would get kicked back to the family as royalties. And you can actually purchase those royalties for yourself. For $63,900, you can purchase $2,500 in income, which is approximately 25 times last 12 months earnings, but you get those royalties for as long as Listerine keeps selling. One of the more nauseant things that you can buy is the music from Quentin Tarantino's Pulp Fiction. For $300,000, you can buy $18,000 worth of income every year. As long as the royalties that you are purchasing are for a thing that is going to continue to exist and be popular, and people are willing to pay to license it, then you continue making income. It's a great deal. And so that's essentially the deal behind this company. They wanted to raise a bunch of money to go out and buy a bunch of song catalogs for as cheap as they could get it, and then they would pay out the royalties from those songs to their investors. The total portfolio had ballooned to 146 catalogs with over 65,000 songs at a weighted average acquisition multiple of 16 times. So like we saw earlier with the Listerine example, you could buy 25 times earnings. This company had bought essentially at 16 times the last 12 months earnings of the total amount of songs that they had purchased, which is fine as long as you can continue to service the debt. One of the things that was in the best interest of the brand was to go out and take the catalog of songs that they owned and see if they could get them incorporated into new media. And so if you can get your catalog of songs incorporated into new media, you can get more streams. One of the songs that they owned was Separate Ways, Worlds Apart by Journey, which is a very old song, released in 1983. What they did was, since they owned the rights to the royalties for this song, Hipgnosis Song Fund worked with the producer of the Netflix series Stranger Things Season 4 alongside Steve Perry, and a remix was created specifically for Stranger Things, which thematically exemplified the growing pains experienced by several characters in Season 4 of the series. And the new version of the song was the soundtrack to the trailer, attracting additional fees, which launched and created the anticipation for Season 4. And as you can see, the US weekly streaming for Journey's 1983 recording of Separate Ways, Worlds Apart exploded from 1 million to over 3.5, and it continued to remain very high. That's one way that if you go out and you buy all these music streaming assets, you get to make some money if you get it incorporated into modern media. The only problem is the management of the company wasn't great. And you can have a great idea, you can have a great company, but if it's mismanaged, it's not going to be worth much. One of the big problems that the company ran into was they had a $700 million line of credit from a collection of creditors. This is basically just like a loan, right? So $700 million, they had drawn $600 million of it, and they had used $600 million of that $700 million total loan to go out and buy music catalogs. And they had $100 million left over, and that $100 million could be used to service the debt. So obviously, when you go out and you spend a ton of money to buy a bunch of stuff, you have to service that debt. And so as long as you continue to buy good music assets that pay good royalties, you can not only pay out investors, but you can also afford to service your debt. The problem is there's a very specific provision in this debt agreement that the total net asset value of everything that the company owns, the total amount of streaming assets that this company owned, had to stay above a certain percentage of the loan. And so the loan was $700 million. That floor was 30%. So the total net asset value of their total catalog had to stay above roughly three times the total loan amount. So $700 million times three, $2.1 billion. And so as long as the total asset value of all of the assets that they owned stayed above $2.1 billion, they would still have access to this money. There's a bit of a disagreement in management. A third party was brought in to determine approximately the actual total value of all of the assets that this company had. It was reported that the net asset value, the total value of all the assets of this company, was a little over $2.1 billion. There was a bit of a disagreement as to whether this number was legit, and so a third party was brought in, and unfortunately, this is where some of the problems started. Hipgnosis slashes valuation of portfolio by 26%. A company by the name of Shot Tower was brought in following a public fallout between the firm's board and investment advisor. And so this company comes in and says, actually, the total value of all of your assets is not $2.1 billion. It's more accurate to say it's $1.93 billion, which, as we discussed a minute ago, is below the 30% threshold of the loan amount. And so all of a sudden, Hipgnosis is backed up into a corner. They have durable streaming assets, but it's not enough to service their debt. Because they were sort of backed up into this corner, Hipgnosis was forced to attempt to sell some of their assets in order to be able to service their debt. And so they put up $440 million of their catalog for sale, and they were hoping that Blackstone would be able to buy it. But unfortunately, 86% of their shareholders basically said, nope, we're not going to let you sell these assets, which is just crushing. What ultimately ended up happening was Merck stepped down as the CEO of this company. The entire catalog of music is sold to Blackstone for $1.6 billion. Yet another private equity company comes in and buys all of the royalties to all of these songs. And so Hipgnosis acted as sort of a consolidator for all of this music royalty industry. And then after they had consolidated much of the industry, then they eventually blew up and were bought out by Blackstone. And so Blackstone didn't have to do any of the work, and they got all the benefit from getting the giant catalog of music royalties.